This Week in the Boardroom, brought to you by corporate board member and host NYSE Euronext, along with governance knowledge partner Paul Weiss and contributing partners National Investor Relations Institute and the Society of Corporate Secretaries and Governance Professionals.
Welcome to This Week in the Boardroom. I'm TK Kerstetter with Corporate Board Member, and once again we're going to be shooting from a remote location. I'm excited that we are here at the University of San Diego at the Corporate Directors Forum, where they spent the day talking about governance. And we're happy to have one of the guests and speakers with us today, and that's Michelle Edkins. And she's the Managing Director, Head of Corporate Governance and Responsible Investment at BlackRock. And we had a great session today. You had a chance to talk about shareholder topics. But I think the first thing, Michelle, that we want to do is take our audience and we need to explain to them exactly what BlackRock is. And you're a $3.3 trillion asset manager. But you're the largest, but I would dare say that you're probably not the best known. So why don't we explain what BlackRock is first?
So you're absolutely right. We are one of the largest asset managers in the world. We are a fiduciary investor. So when you say $3.3 trillion, none of that money belongs to BlackRock. It is our clients' money, and we are very conscious of that. So everything that we do through our business day is to pursue the interests of our clients. We are a sort of mixed investor. We offer a range of investment products and solutions for our clients, and at the one end, and the foundation of our equity investment, which is the area that I tend to focus on, is indexed investment. So it is a very long-term, passively invested suite of products or services for our clients. We also benefit from the fact that we have a very sophisticated fundamental investment team globally, which takes investment decisions based on specific stocks and specific sectors. So from my perspective on the corporate governance and responsible investment side, we have the stability of the index investment, which means that we are, by definition, a long-term investor on behalf of our clients, which really facilitates discussions with companies. And then we benefit from the expertise that is very specific to companies and sectors and markets of our fundamental team. BlackRock's goal is to build a better financial future for our clients. And my team contributes to that through monitoring the way that the companies that we invest in on the behalf of our clients manage those assets, manage the assets that we have entrusted to them over time. And so for us, corporate governance is a value issue. It is not a compliance issue.
Well, it's hard to believe that you invest in some 10,000 companies. So, I mean, that's just an enormous number. Now, you can't be happy with all those investments. So at times, are you an activist? Are you one that will push for change?
I think activist is a really loaded word, and I think it's unfortunate that it is loaded. What I would say is we are certainly very active, which sometimes sounds a little bit like a contradiction in terms when a significant portion of your equity investment is managed on a passive basis or an index basis. But when I say active, what I mean is that we are actively monitoring companies and seeking to understand how they are serving the interests of shareholders through their business model, how their performance over time is being delivered through the strategy and through the oversight that the board has offered. I think it's also important to recognize that the way that we define good governance is not about policies and codes, but about good leadership by boards and good quality execution by management. And so we do get active where we think those things might be awry. But activist suggests something in the public domain that's quite adversarial or aggressive. What we are trying to do is present the shareholder perspective on performance, on governance issues, on sustainability issues, if that's relevant to a particular company, so that boards can take better informed decisions about those issues, so they understand the shareholder perspective.
Well, Michelle, BlackRock created a little bit of buzz this week, and it's sort of gone around, the conference here. Your CEO sent out a letter to some 600 global companies, I think of about 300 were U.S., that basically said, we are open to have discussions with companies that are, even though you are doing something unique, if it's for the betterment of the shareholders, we want to talk to either your management and the board. And this sort of flies in the face of all the frustration that we hear that companies have trouble talking to proxy advisors and other companies and reaching. And here you are reaching back to the companies and saying, even though we're 3.3 trillion, we're going to find time to have these discussions with you. Tell me about that.
Well, the objective of the letter is threefold. One of the objectives was to communicate our view on good governance, good ownership by shareholders, and to be clear that we see it as part of our fiduciary duty to our clients to have an active corporate governance program. The other part of it was to encourage companies to engage with investors, BlackRock and other investors, in advance of the discussions that they have with proxy advisors. And particularly in the US, we are concerned that there's a little bit of a skewed effort to getting the support of the proxy advisors rather than getting the support of the shareholders. Now, proxy advisors serve a really important purpose, and certainly we could not participate in the shareholder meetings of the 10,000 companies that we invest in globally without them. They distill a lot of information, they present it, and they enable us to be more efficient in allocating our time, so we allocate it to those companies or situations where we think, as a shareholder, our input would have more of an impact or more value. It's also important to recognize a little bit tangential point that most companies are doing a pretty good job most of the time, and there aren't governance problems, and most issues or items on the shareholder on the agenda rather for the shareholder meeting are routine. So it is important to be able to focus, and proxy advisors help us to do that. But we do think that companies will have a better outcome at their shareholder meetings and more generally if they understand their shareholders' perspective and then talk to the proxy advisors. The third part of the communication, or the third point we're trying to make in the letter, is that BlackRock has its own corporate governance policies that are in the public domain, and a lot of companies know about that. But it's really important to know that they're applied pragmatically. We recognize that governance needs to be nuanced to fit the purposes of individual companies at specific times in their development. And if companies will make the effort to explain to us why doing something slightly unconventional is in the interest of long-term shareholders, we are willing not only to listen, but to accept that. And we leave it to boards and management to initiate that conversation, and particularly if they anticipate there could be problems at their AGM because of something unorthodox. We want them to anticipate that and start that dialogue well in advance of the AGM. There is no point waiting until 3 days before your AGM and the votes start coming in to recognize there's a problem. Boards, they're business leaders. They should be looking forward and trying to assess how their approach might be interpreted by others.
Well, I can tell you that on this show for many, many shows, we have stressed the importance of improving shareholder communication. So that part of your letter is nothing new from what we've been saying here. But I am curious if you could sort of summarize for me what you think makes an effective board.
Sure. I think the most important thing is that the board is a competitive advantage for the company. Now, this might sound a little bit nebulous, and perhaps it is, because it's one of those things, you know it when you see it, and certainly you know in retrospect when it wasn't the case. But what we really want boards to be doing is those things that only the board can do. And I think that's a really difficult balancing act in practice, because boards have many, many facets to their responsibilities. But I think if that's the overarching ambition, to be the counsel for the management but not to manage, to be the conduit to shareholders but to also take on to distill those messages from shareholders, and then take a balanced judgment in the interest of the company as a whole. Those are the sorts of things that directors, good directors, proactive directors can do really well, and therefore make an effective board. I think there are some practical things that help a board be effective. One of them is diversity, and by that I mean a diversity of skills and experience, because the business world, as we all know, is incredibly dynamic. It is very difficult to always be on top of everything, but when you have people who look at the world from a different perspective, you can help anticipate some of those things. One of the other things that we think is really important is board refreshment. Now, that is not to say we have a specific tenure in mind, but if everyone has worked together for a very long time, the odds of groupthink and sort of an ossification, if you like, are higher. And I think it's a very good discipline on boards to have a board evaluation, to assess whether they have the right people for where the business is going now, and to address it if they don't.
Well, that's certainly a big issue, and we'll have to watch what develops out of that. Now, today you were on a panel, hot shareholder topics. So identify for our audience, if you would, and it was a great panel in the sense of your other panelists who were institutional investors and the like, but share with us what you think will be the top shareholder proposal that people should sort of be prepared for this year.
Yeah, I mean, I think the top shareholder proposal issue is, well, it'll depend on the company, but I think it's going to be a race between proxy access and disclosure of political contributions. And I think those two will be the key themes coming through on that front, I expect. But I think the top issue more generally, outside of the shareholder proposed resolutions, will be executive pay.
Won't go away, will it?
It certainly won't.
Yeah. Well, listen, Michelle, I really appreciate that you would spend time with us here at the conference.
My pleasure.
And it's been great having you on the show. And that will conclude this week's edition of This Week in the Boardroom. We'll be back again next week when we take another look at critical issues that can help you be a better board member and a better committee member. So we'll see you then.
Join us again next week for This Week in the Boardroom, brought to you by corporate board member and host NYSE Euronext, along with governance knowledge partner Paul Weiss and contributing partners National Investor Relations Institute and the Society of Corporate Secretaries and Governance Professionals.